I'm Julie Beckham, the Financial Education Officer at Rockland Trust, and this is the No Shame in This Money Game's Mini Money Minutes. Why Mini Money Minutes? First of all, you're busy and you want your info fast. Secondly, who doesn't love mini things? In fact, human beings love mini things so much that our brains actually release dopamine when we see cute little things. For real, we actually derive satisfaction from mini things because we see them as less threatening. So, if we are less threatened by mini things and mini things can actually make us happy, what if we learn about money through Mini Money Minutes? Let's go. Today's bite-sized Mini Money Minute, your credit score. What is it and why is it so important? On a very basic level, your credit score is a measurement that tells lenders how likely you are to pay back a debt. Now, no matter how hard you worked at school as a kid, it's not your SAT scores or your GPA that will be following you into adulthood. It's your credit score. Your credit score, or sometimes referred to as your FICO score, as that is one of the main analytic companies that calculates your credit score, is based on your credit report, which is a detailed account of all your lines of credit and payment history. More important than knowing what your score is checking your credit report. You want to make sure it's accurate and that no one has stolen your identity. You can check your credit report for free from each of the agencies that creates them annually at annualcreditreport.com, and then you have the opportunity to correct any inaccuracies. Now back to your credit score. Your credit score is determined by evaluating the following 5 factors detailed in your credit report. 1. Your payment history. Have you paid your bills on time and for how long? 2. Your credit utilization. How much of your available credit do you use? P.S. These first 2 categories make up more than half of what calculates your credit score, so be sure to pay your bills, auto loans, student loans on time. And experts suggest utilizing less than 30% of your available credit to maintain a good credit score. To break down utilization, for example, if you qualify for a credit card with a $1,000 limit, don't carry more than a $300 balance month to month to keep your utilization low. The remaining 3 factors that go into calculating your credit score are age of credit, basically how long you've been trackable, new credit, do you say yes to all of the retail stores that ask you to open a credit card in exchange for a discount? Opening new credit cards, loans, or lines of credit multiple times a year can lower your score, and mix of credit used. This is usually achieved over time as you establish credit through credit cards, student loans, auto loans, mortgages, etc. Now let's finally talk numbers. A credit score can be between 300 and 850. If we're talking excellent, good, and poor, anything over 800 is excellent. Over 670 is good, and under 580 is considered poor. Most major credit cards provide you with your credit score for free, so if you're looking to get your actual score, that's your first stop. So what does your score get you? If you've got good or excellent credit, that makes qualifying for credit and loans easier. But it doesn't make you immune to a drop in your credit score if you don't maintain the financial habits that got you to that place to begin with. And the reverse is also true. If your credit has slipped or if you're just starting to build credit, take heart. It will take time and persistence, but knowing what goes into building your credit helps in that process, and developing healthy money habits like paying your bills on time and not using all of the credit you qualify for can be steps in the right direction. And remember, because there is no shame in this money game, do not define yourself by your credit score or even by this method of scoring. You are more than your credit score. So then why should you even care about your credit score? Well, 1, you may want or need a loan. 2, a good or excellent credit score can qualify you for better interest rates on those loans. And 3, some employers can request to check on your credit as part of your background check to see if you're a responsible borrower. So, as much as we don't like to be graded as adults, this score can make a difference in your financial life. So, that was credit scores in a bite-sized Mini Money Minute. Hungry for more? The No Shame in This Money Game podcast will return with more bite-sized Mini Money Minutes. Until then, keep listening and keep learning with Rockland Trust, member FDIC, the bank where each relationship matters, because we want you to have a healthy relationship with money at any age.